When we talk about banks, the most important institution is Reserve Bank of India. Reserve Bank of India is the central bank. Central bank because it controls all banking institutions. So Reserve Bank of India is the most important banking institution. Central bank is the most important institution in any country, and in India the central bank is Reserve Bank of India. Now when we talk about Reserve Bank of India, the question is, how old is it? So Reserve Bank of India started in 1935. So the history of Reserve Bank of India is from 1935. And Reserve Bank of India is the banker of all banks. Before 1948, it was controlled by Britishers, and after 1948, it has been nationalized. It is now under control of Government of India. So Reserve Bank of India is the most important banking institution of our country. 1949 was a very important year for banking because Banking Regulation Act was enacted in 1949, and this is the fundamental law which governs the banking in our country. The Banking Regulation Act 1949 empowered Reserve Bank of India to regulate, control and inspect banks across the country. 2 years were very important in history of banking in India. They were 1969 and 1980. On 19 July 1969, 14 major banks were nationalized. And again in 1980, on 15th April 1980, 6 banks were nationalized. Now, these 2 years, 1969 and 1980, are landmark years in the history of Indian banking. The question is, why were the banks nationalized? The banks were nationalized because banking is the backbone of economy. Banks work for the development of the country. If banks are under the control of the government, then you can be sure that the banks are promoting the economic policies of the government. They are working as per the priorities of the government, and they are in direct coordination with the government. Most of the banks at the time of independence were small, fragmented, and they were in private sector. They were not, except Imperial Bank, they were not in direct coordination with the government. They worked primarily for the interest of traders, businessmen, promoters, not primarily for the interest of the country. So their priorities were different. And that's why the banks did not command very high level of trust, confidence of people. So it was important to nationalize the banks. So in 1969, 14 major banks were nationalized, and after nationalization, you can see there has been tremendous growth in banking in India. Now people have tremendous confidence on banking in India. People believe on banks. They trust on banks. They trust on banks more than on their own relatives. They deposit their money in bank feeling fully secure that our money is 100% secure. And the bank managers also command very high level of respect because people recognize banks as semi-government institutions, and they believe that the banks work for promotion of the priorities of the government, and they work in close coordination of the government. So you can say 1969 was a major landmark in banking. Again in 1980, when it was realized that there were still some banks which were very large and they should be nationalized so that they operate in the interest of the country, they promote banking in rural areas. So 6 major banks were again nationalized in 1980. Now what are the advantages of banks nationalization? Look at it. Due to nationalization, the confidence of people in banks has increased manifold. Otherwise, as I told you earlier, we have banking as old as civilization. We used to have banks earlier, long back, 200 years back, 300 years back. We used to have banks. But these bankers did not command very high level of trust and confidence of common people, because these banks were, the bank lenders were operating for personal interest. But the banking of today, the modern banking, really evolved after independence. When banks were nationalized, then these banks which were nationalized, they are working for the common interest, for the people's interest, for government's interest. So now you can say these are true banks because people believe on them, people have trust on them, and these banks work for the promotion of the interest of the government. So this is how the modern banking has evolved after nationalization of the banks in India. After nationalization, banks have opened large number of branches all across the country, including rural India. Before independence, they were not opening their branches in rural India. They were opening branches only in those cities where they found it profitable. So when opening the branch, their priority was profit. After nationalization, all these banks started focusing on national priorities, and for national priorities it was important to open banks in rural India, so they started opening branches in rural India. So we had major expansion of banks in rural India all over the country. So we can say because of nationalization we had mass banking. Mass banking means earlier the banks were focusing only on major urban cities. Now after nationalization, banks started opening branches all across countries in rural areas. So in all important villages, you could find one bank, one post office, and one primary healthcare center and one educational center. So these 4 things you could find in any village, and these 4 things were considered important for development. Villagers came forward, they started making requests that banks should be opened in their villages, and banks were opened in those villages. And villagers were able to cultivate the habit of savings. They started opening their savings accounts in banks. The habit of saving money, the habit of protecting money for future started developing among people. So banking in a way changed the life of people, because if you look at before independence period, people really did not have any secure source where they could deposit their money. They could be sure that if they are protecting their money, they can protect the money and put it somewhere. They did not have any place where they could keep the money. Right? After nationalization, the banks were so trusty. People had trust on banks more than on themselves. So whatever savings they had, they used to deposit in the banks. And this way, people started saving money. They became secure about future. Whenever they required money, they could borrow money from the banks, and they had a bank available to them anytime as their friend. So we had evolution of mass banking, banking for common masses from 1969 onwards. The third year, which is very important in the history of banking in India, is 1990, which you can say is the beginning of liberalization. Liberalization because after 1990, the banks were given more and more liberty, freedom. And this freedom meant that banks started modernizing, evolving, developing, competing, and becoming global banks. Anytime banking, anywhere banking. These terms which were not known earlier, they started coming on our country after 1990. So we had evolution of new generation technology savvy banks which cater to youth. Youth is now educated and youth is technology savvy. Youth needs banking as modern technology products.